Hello ladies and gentlemen, this is Nathan from my Crypto Paradise. In this video we will be looking at the Tellor yet again. This will be our second analysis on this coin because this is simply one of the most interesting perhaps opportunities in the coming weeks and month. And in this video we will observe the price action of the Tellor against the dollar as well as the Tellor against the Bitcoin, and of course whether there is a more potential to the downside or to the upside, considering that the market is so unclear right now and there are so many questions by investors whether they should hold or sell, go to the Bitcoin or move to the USDT. And in this video we will try to look at the Tellor specifically and try to understand where is the highest probability and what we might be expecting based on the certain price actions. Now we all know what is Tellor. We went through that in our previous videos. This is the decentralized Oracle network. Seems to be like an extremely interesting project overall. Now let's jump to the Coin 360. This is what we like to see a lot. The market is not bleeding. Quite to the contrary, it's green. It's greenish all over the place. So the market is growing. There is a recovery, it seems, because all of the coins, well, just look, there are just very few coins that's still in red, but mainly the recovery is going pretty good. We have 12% recovery on Ethereum, 12% on DOT, 20% on Binance Coin, ADA, 3% nearly. So overall, the recovery phase has started, it seems. And maybe this will apply to the Tellor as well. So let's jump to the Tellor against the dollar price action. One of the most interesting points in this price action is that we have this bounce of this support area. Now, if we go previously in the price action right there, back in September, we had this rejection, then another rejection. We can see it repeated itself quite a lot of times. So obviously this is a very strong supply demand area. Currently it is acting as the demand, of course, because we are testing it as the support this time. Now another interesting thing is that price is rejecting the simple uptrend trend line. There was an attempt to break below. There was a huge spike below the support area as well as below the uptrend trend line. Nonetheless, the daily close stayed above the trend line, which means that the market is still bullish simply because we are producing higher highs and higher lows. The risk of further correction remains high and it still will be a bullish market, because in order for the trend to become bearish, we definitely need to break below this low. Then we can consider that the downtrend is likely to continue. Now at this point, the sentiment is not that clear. Now this is because we have this rejection of the support, but on the other hand, we had the rejection of the resistance area. Now this resistance, we see that it was the resistance here, it was the support. So this is the area at $44 that is clearly acting as the resistance. Besides, we have two fibs applied to this chart. One applied to this overall move to the upside and another applied to this correction. And we can see that there are two retracement levels, 50% and 38.2%, almost exactly at $44.5. This makes the area between $43 and $45, which is marked there, an extremely strong resistance. In order for the price to at least confirm some strong bullish intentions, we need to break above this resistance, because here we also have a simple downtrend trend line which is yet to be tested, and maybe we are forming this triangle right there. So price is currently within the triangle, and unless we have some break to the upside, it is too early to say that the market is becoming bullish once again, because the consolidation can be extended further. Investors are likely to monitor the resistance as well as the support. For now, range trading between these two price areas is what we're expecting. So if we break to the upside, the most likely scenario, retest of the previous high, and then maybe price will go towards the new all-time high, potentially towards the $100 or even $200 psychological level. Yes, it is possible, but obviously we need to hold this support. If not, we are likely to move down towards this support area at 88.6% FIPS, and it is $20. So $20 psychological level can be tested only upon the break below the support area between $26.5 and $29.3. Now let's have a look at the Tellor against the Bitcoin, which is extremely interesting. Now this is the daily logarithmic chart for the TRB BTC, and the most interesting part here is, as you have probably spotted, this rejection. We had a very good rejection of the support, which is 88.6 FIPS, quite a nice psychological number. So this is a very strong price. At the same time, we had a previous low at 500, which is yet another strong psychological level. So one psychological level got rejected, then we had another psychological level rejected. And of course, this is the 88.6 Fibonacci, a very common retracement level, and it's usually the final one before the uptrend continues. So we might be expecting that this could have been the bottom, but this is of course a very risky approach, because we can see that the price is kind of producing lower lows and lower highs. So maybe we will attempt to break below this low to retest the bottom yet again. Now another thing in favor of the bears is this rejection. So we had this support trend line, it got broken, and then it became the resistance here, and this means that the selling pressure was pretty high at this point, and if the price will go up, we definitely must break above this area here in order to confirm the long-term uptrend. If we zoom the chart, you can see how clean this bounce was. There is this area where the price has been consolidating for quite a bit. There was a lot of volatility, and what I did is applied a volume profile indicator to this area. This is to get a perspective at which price there was the most trading volume, and this was at 610. Almost exactly at this support area, which means that there is this probability that this could have been the bottom. Nonetheless, it's a very risky setup for buyers to get in at this stage, very risky, mainly because we had the rejection of the downtrend trend line. So if we go to the forward chart, we have the simple downtrend trend line, there was this rejection, and at the same time there was the rejection of the 200 exponential moving average. A very clean bounce at 900 almost precisely. At the same time we had the rejection of the support. Now this means that this area between 900 and 600 is clearly a range trading zone, and there won't be any strong price action, any strong move for the price before we have some sort of breakout. Bulls are likely to wait for this breakout, and considering that there was this very nice rejection, the probability is in favor of this break to the upside. But having said that, there can be also break below this low, and in that case price is likely to go towards the new lower low. This is because overall the triangle that has been formed here, we had broken to the downside, we have rejected the resistance, so this is still is a downtrend in the long run, and price might be consolidating very widely here as well, but this is only as long as we hold this support. Now break above the resistance should send the price towards this resistance, which is near 1,300, and then potentially towards the downtrend trend line near this area, price area. So this is another resistance at roughly 2,000, and only if price will manage to break above this area, it could be a potential confirmation of the long-term uptrend. And just to summarize, Tellor does look bullish against the dollar. It's still a long-term uptrend. Nonetheless, the risk of further correction is likely, so we might be seeing that correction to the downside. Of course we can. But at the same time, considering that this is the bullish market, the probability will remain in favor of the bulls and in favor of an uptrend, at least in the short run, where the price is likely to retest resistance before and if breaking higher. And just a quick Elliott wave analysis, maybe, just maybe, we're having 1, 2, 3, 4 and 5. This might be the case, especially considering that right now this is a potential A, B and C corrective wave down, similar as what we have previously, A, B and C. So this could be the case once again, and we need to break above the resistance and above the B wave specifically to confirm the uptrend. In that case, we might be heading towards $100 or $200 psychological resistance areas. So for now, it's a range trading. Be careful, stay very cautious in this market because right now it's quite unpredictable and risky. All right, that's all for today, ladies and gentlemen. Don't forget to take it easy and smooth, and see you next time.